Okay, good morning, Pat. Hi, Pat. Okay, we're going to start with the basics here. When you first get your Green Line account, you want to log in, so we're going to go to the web page and log in. And first thing people normally go to is the dashboard to find out where to go. So dashboard is up, there's the menu up here, and the dashboard is right here. Yeah, we'll talk about stop losses later. Most people want to know what to do, so on the dashboard you have all these links here. So the first one you go to is the watch list. Here's the stocks we're going to buy probably Monday: Palantir and Black Bear. And if you want to see the charts, which we recommend you do, is click on the chart link. Here's Palantir, and what we're waiting for is a buy signal where the money wave down here crosses above the blue circle and out of the green zone. So Palantir will probably be a buy signal on Monday. Everybody understand that? Okay. Also, below that, the daily chart is a 60-minute chart. And many times, by the time we get a buy signal that afternoon, say on Monday afternoon, this one might be up 5 or 6%. So if you want to try to get in early, we go to a 60-minute chart, and first you want to make sure this is going to cross the 20, which it probably is on Monday. So if you want to buy this, if this thing starts up, it looks like it went green. The green candle there on late Friday afternoon. So this one's probably going to go up Monday. And if it starts turning up, you might want to buy it then. Everybody understand that part? And we also have, we bought quite a few the last couple of days. So there's only two stocks right now. Black Bear made a high. It's pulled down a lot, flushed people out. And it should go up again. It might not go into a buy tomorrow. I mean on Monday. Same thing. It's still these colored candles here. Red means that all three of your indicators are in a sell. Blue means two of them are, and green means they're all three in a buy. Check the volume here. Okay, is that better? Can you hear me now, OS? Can you hear me now? Okay, good. Okay, so for very new members, you want to go to the dashboard and find the find the stocks we're going to buy. Those are called the watch list. And here's a list of them. And then here's the charts of them. They're all on this page. Here's the menu once again. Now we're going to go to current charts, and these are one positions we already have. And it takes a few seconds to load it up, and these are listed here. They're fairly small. If you want to see them better, go over here to view, and it'll make them larger, and you can scroll through these during the day and see how your stocks are doing. We bought HIMS. Well, it was up 9% yesterday. We bought HIMS and so forth. You can scroll through there and see how they're doing. Somebody asked about stop losses. This one actually went lower, so we lowered the stop. Normally we were going to bet on a bounce here at 10.09, so we lowered it because it's in the green zone with a 95 relative strength, and it just made a high, and it's on the bottom Bollinger Band. So there's not really a good reason to dump it here if it's probably going to go back up. Sorry about that. I was telling you about this OFPI. Can you hear me now, Ben? The it's correcting the huge move from 5 to 1773, and that usually takes a pretty good pullback. And the guys that bought up here, they're down huge, and so they're getting margin calls or they're selling out with a big, decent loss. Now, this one, since it has a 95 relative strength down here, the SCTR rank, it's stronger than 95% of all stocks. So it's normally going to go back up again. We're hoping to go to 15, which would be a nice gain. So we did lower the stop here because we don't want to get flushed out here. When it's in the green zone with a 95 relative strength, that's about as good as you can get. Any questions on that? It seems like there's a delay on between your chat and when I ask a question. OLT, anybody have any questions on these daily swing trades? Okay, let's go back to the dashboard and talk about some other stuff. Several of y'all come to the trading, and the banana hunt is something that many of y'all don't quite understand. And it's a real simple system. This is on the link there. click on banana hunt list. And okay, and this is called the widespread, where you have, it looks like there's about a 15-second delay, so I'll let the charts come up here. But the first chart is cold and boil, which are natural gas long and short, upper, or we call them bull and bear funds. Boil is a way to participate in natural gas when it goes up, and you can see it went way above the banana line. The banana line is what stuff's really worth if you take out the human emotions, fear and greed. So we know that cold and boil are both going to meet again with the banana line. And George the monkey knows that. That's how he makes money. He just is trained to, you get a wide spread on, this is a bear fund cold, this is a bull fund. When they're spread wide, way above the banana line or below, that's an opportunity for you to make money. So here you had a M pattern, which is what George looks for on boil, and now it's starting down, and it's already dropped probably 10%. And then cold has had an M here, and it's going up. They don't always make it to the banana line right away, but eventually they will. So what if you're looking for things to do, you go through the banana hunt. These are called pairs. Here's the Tesla. TSLL is a Tesla double fund on the upside. It's down here at 13, and the banana line's at 24. We don't have a W yet, but these have just gotten killed. And then the inverse fund, TSLQ, is way above the banana line. Can you see that? So this creates opportunity. This one, TSLQ, is going to come down in TSLL. So most people would buy TSLL or Tesla. These are down way below banana line because of fear. They've flushed out all the Tesla people from 488. It's dropped $200, Tesla has. So people are just getting margin calls for getting flushed out. So you go through here and you look for some pairs. This one needs a, TSLQ needs a double top, and TSLO really needs a sort of a double bottom. A lot of times they'll come up to this line. I don't know if you can see it, but it's a 65-hour average, which is basically the 10-day average. So they usually come up here, which would be the middle of the W, and then they'll come back down and retest the low. Then you can have a nice banana hunt with George the monkey. If you guys don't know who George is, you need to watch this video. It's up here at the top, and you'll learn about George and how he makes simple trades, but because he doesn't use emotions like humans. Let's see, we'll go to small caps. They've really tanked. So here's TNA, which is a leveraged 3X fund, and it's way below the banana line on fear. We're getting some bad interference there. TNA is way above, and TZA, the bear fund, is way above. So TZA is probably going to lose way down in here, and TNA is probably going to go up $4 or $5 here. So that creates opportunity because of fear. So George the monkey, he doesn't know fear. He just buys it because he likes bananas. That's where the term comes from. So if you came here from Mars, it'd be so easy to teach you guys to chase bananas, but because we're humans, we want it to be logical, and it doesn't really make sense. George is a monkey. He doesn't care. He just wants bananas. And here's bonds. TMF is the long bond fund. It's way above. TMV is way below. So this tells you that bonds are going to drop, and So the inverse bond fund should go up here. And if bonds drop, it means probably the economy is going to start. Right now, people think the economy's slowing down or they're scared or whatever. So bonds have been sort of a flight to quality or safety. So bonds are overbought, and they'll probably come back down to normal, which would normally mean the market's probably going to bounce because stocks are way below on fear. Let's go down here to here's the S&P. You can see it came down here, and this says I'll wait for it to catch up here, but SPY got way below the banana line, and then Friday it turned up, and we got a green candle there, and that means that that's a triple buy signal. So people are buying it again, finally, and it's quickly back up. Looks like it's almost to the banana line already. So, and SH, if you sold it or shorted it way above, you would have had a decent gain on Friday because it turned red candle. Any questions on this? We talk a lot on the day trading about M's and so forth. It's best to get an M pattern because an M pattern is double bottom, which smart money uses that as a buy signal. You get an M, it means you're out of sellers normally, so people buy. Smart money doesn't bottom fish. They wait to be told with an M or a double bottom. That's because then they can buy at the second leg of the W and put a stop under it, and they might lose a buck or so here, but if it works, they're going to make $8. So the reward to risk is very high. Same thing here. It's hard to see, but on SQQQ, it had a little double top, and it couldn't make a new high. It made an M, and then next thing you have a red candle. So this is real simple. You get a wide spread between the bear fund here, or this is the bull fund. TQQQ is way below bananas, and SQQQ is way above, so it creates opportunity. Here's semis the same way. SOXL and SOXS, they both, I'll let it catch up here, but SOXL went way below banana lines. And one thing to take note, the semiconductor index has gotten weaker, so they're not leading like they were last year, late last year. Semiconductors are, I think the index of this SOX is the root index of these two. It's down to like a relative strength of only 10, so they're probably not going to be the darlings they were last year. Bitcoin is dumped here. BITO is the bull Bitcoin. You can see it's way below, and then there's an inverse BITI, and you got another widespread there. So we try to mark where it says widespread and look for those, and then just pick a place to make some money. That's really how simple it is. Everybody got this? Any questions? Okay, good. See what else there is here. There's about 12 pairs on this banana hunt list. So scroll down there. We try to keep the ones that are widespread near the top, but there's a lot of opportunity now because there's a lot of fear, and so look for M and W patterns and make some money. This list is always available. If you want to see the charts full size, just click on that and you can see them easier. See if I can get, there we go. I'll show you the S&P here in a second. Oh, another one, the China funds, yin and yang, were way apart, and they're starting to come together. Here's yen finally starting to roll over. It'll pull up here in a second. Yeah, you can see the blue boxes indicate a possible M pattern, and after that it gapped down, and the banana line's way down here. And then yang is the bull fund. It got way below there. Anybody having trouble with sound? Jim says he can't hear. Okay, we're going to go back to the dashboard, and there's another area. Thanks, OLT. Strongest stocks, which is good for if you don't want to sit around and wait for a day trade. OLT you can, or OS you can't hear. Let's see. You go down here to under day trading, strongest stocks, and I'll let the YouTube feed catch up here. Yeah, we're going to click on strongest stocks, and these are the ones that have made new highs. Like Tuya is a little company that broke out and began stage 2 bull. Went to, you can see it had a huge move from $1.80 to $4. It's overbought right now, but it's probably going to go back and test the high again. So we're waiting for a green candle here. It tried it, looks like on Friday, and fizzed out, but this is one you can watch. You can see it's gone from green, a red candle, now it's blue, and usually takes above the pink line there, the dotted pink line, before you get a green candle. That would be your buy signal. Green candle means that your stochastic down here in the MACD, and the pink line means you're in triple buy. All three are in a buy signal. Here's one, this VNet is very strong. It's correcting. Had a big run here. This is called an impulse wave, the power move. Now it's correcting. Needs to get above this blue dotted line. That's just a straight line between the high and that resistance. Breaks out, a lot of shorts will cover. We're just waiting on a green candle there. And GDS went into a swing buy on yesterday, and it should go back and test the high again. Let's see, BABA, these China funds stocks are real strong, but they're very overbought. If you look here, you got a banana line way down here, so we're not buying those yet. It's too early. They're too stretched out. Here's a little one, apps, that made a high, and it's pulled back almost to the banana line. And so this link called Strongest Leaders has the strongest stocks that have made new highs, and we're just waiting for them to quit going down, flush the margin accounts, and then they'll go back up normally because they have real high relative strength. BlackBerry, we bought that. This is a correcting wave. It's coming down, and it needs to have a green candle, and so same story. Here's Cloudflare, which made a high. These are all ones that are strong. Yeah, OS says he's holding the bag. We have the VNet. We're stuck in that one also in the on the day trading room, but it should go back up again after you have to realize they went up huge percentage moves. Let me see if I can get VNet on here for you. The percentage move on those is huge, so okay, I'll let it come up here so you can see VNet. This is a daily chart coming up on VNet, and you can see it went from like um, I'll let it catch up here. There it is. Nope. There's VNet. You can see it went from like $4 to 16. So that's a tremendous impulse wave, 400%. So you're going to have a big pullback, and it's coming down. It's not even in the green zone yet there. So might have reversed Friday with that candle there, but did 10 million shares, but it's normally going to go try the high again. This is the 60-minute chart coming up here, and you can see the correction, and that's where the blue downtrend line, it really needs to get above that. So OS we bought VNet too soon, or should have stopped out, but it's about to cross the, yeah, you can see it there coming up. When it crosses the blue line, the short sellers should cover, so they have to buy it. And then a lot of people shorted it because it was so overbought, but they're going to get blasted normally because they don't realize it's got a 99 relative strength, and just that's going to go test the highest. So the shorts are probably going to get blown here in a few days, probably this week. Here's another one that popped up, XNET on Friday, so we might be able to buy it on a pullback. If you look at these, when they're way above the green line, that's not a good opportunity. But when a stock goes up, I'm on this XNET coming up here, you can see that there's a high volume bar down here. So it went up on high volume. Normally they'll come down, and then if they're going up on high volume, they'll almost always retest it. The only hard part is deciding when to buy it or how much it'll pull back. And so a normal ballpark would be pull up the 60-minute chart. Here's the 60-minute chart coming back. It's still way above the banana line. And so there's two good places to buy. Don't ever buy it on a red candle. You can see it made a high yesterday way up here at 480, and next thing you know it's 340. So some people did buy it on a bottom fish there, and that was a decent trade there. But this red line is a 65-hour. That's equivalent to a 10-day. 65 hours is, there's 6.5 hours in a day. So 10 of those is 65. That's the same as a 10-day average, which we use for buy and sell signals, or a lot of people do. But so this one, if it comes up here in double tops, then you'd want to sell it and buy it back. It's going to return to the banana line. But anyway, this particular list is called the strongest leaders list, and let me go find it again. And strongest leaders is a place to go if you want some action during the week, and you don't want to wait around for day trades. This is kind of strongest leaders list is sort of in between the scalping day trades we do on YouTube, and then a swing trade would be the opposite. That's more of a 3-day to 3-week move. These strongest leaders, they're more like 1 to 2 day trades, where like this Toya coming up here, TUYA, it's normally going to go up. You can look at the days. It's normally going to go up, test the high in just a few days here. So you wait for a green candle, wait for a buy signal, and buy it and see what happens. On these, just wait for the, don't ever buy them below the pink line. Always wait for that. And then if they lift off here, you can use your pink line as your stop out. Get out. If it's not squirting up big like over here 2 days ago, you can see it went from 340 to 460. A lot of green candles. That's real powerful. But it is pretty rare to have that many green candles in a row. Okay, let me think here. Any questions on these strongest leaders? No? Okay. Somebody asked earlier about stop losses, and the general rules on the swing trades is we don't sell. If we have a stop at $6, we're not going to sell it to the end of the day, because a lot of times they'll take it to 580, run the stops, flush out the weekends, and then it'll close at 620. And that's sort of a manipulated way the market makers take advantage of investors. And also, if a stock's pulling back a lot, check the current positions list before the close, or email or come on chat and ask a question, because many times we'll lower the stop because we don't want to sell a 95 relative strength stock down at the bottom of the correction. So we'll lower it. Say they drop it another 30 cents. We don't want to give it away. And that happens a lot. That happened on, let me see here. That happened on that Warner Brothers. They kept taking it down and down, and just about got flushed out of it, but we hung in. Let's see. So a lot of this is an emotional business where they know people are nervous. Most people buy this stuff way too high, and then they fade back down. They get scared and they sell, and that's how most people lose money. Let's see. Here's a. I'm looking for this Warner Brothers Discovery. Yeah, this one was just trying to flush us out here, and well, it hadn't come up yet. But WBD made a high at 1270. They took it all the way down to the green line, and now it's going back up. This one needs to get going, or it's going to be a big M pattern or double top. So it needs to make a higher high. I don't know if it is. They had good volume the last couple of days. Kirk, hey Mark, how are you? Let's see. Kirk said buy VNet and XNet. Those VNet and XNet are both on that strongest leaders list. So that means to buy them on pullbacks, either So follow the list there and just wait for green candles. Um, but back to, let's go to Tesla real quick. Buried in that for a long time. This is Tesla is unusual because we bought Twilio. Twilio has a nice long-term pattern to it. Oh, that's one more area we can go to. There's we're going to go to the 4 stages of an investment. And a lot of y'all don't know that, but this is called stage chart investing. So we're going to go down here to the dashboard menu. Near the bottom it says stage chart investing when it catches up here. Naptown says, are the drops the green line short sellers? It's the big drops the green line are really the long positions, the guys that bought high. Many people buy this stuff on margin, which they shouldn't, and then they drop 30%, like Palantir, and they get flushed out because they get a margin call. But something everybody should know about here is called a stage chart investing. And if you're looking for the big home runs, you have to find investments that are coming out of stage 1 base here. I'll let the chart pull up here. There's 4 stages to any investment, and all they do is cycle over and over like waves in the ocean. But the cycles can be 1 minute or 15 years. It can be long, or depending on the time frame chart. So stage 1 is your base here. A base or sideways is indecision, and they're trying to decide, is the company going broke, or are they going to survive and go back up? Once a decision is made, if it breaks out, it starts a stage 2 bull, has a run. This is when everybody gets in, and oh goody, they're not going broke. That happened to Twilio not too long ago. I'll show you that in a minute. But they've decided Twilio is not going to go broke, and so people are starting to buy it again. Then they get to extended, like a lot of stocks, like Nvidia is probably up here in stage 3 top because everybody's in it, and then they'll take them down and flush them out again on stage 4 bull. So on here, well, here's a good example of the 4 stages. This Novavax, which we're in right now and stuck in it. But you can see that it's had 2 or 3 complete cycles where it goes from boom to bust, and they kill it, and now it's down here low. It was $260 3 years ago. And now they've taken it down, and it's trying to bottom out here. And we've traded this Riot blockchain, which is a Bitcoin stock. When they surge up like that, very powerful, those are called parabolic curves. And parabolic curves suck every last person in. Everybody gets in, all the shorts get blown. There's no buyers left, so they don't end well, they tank. And that's where a lot of AI and semiconductor stocks are up here in parabolic curves right now. But we're going to go back and let's go to back to the, if you scroll back up, there's a 4 stages menu, and we're going to click on stage 2 bull here when it catches up. And stage 2 are the ones that have the decision's been made. They're going to start going up, and yeah, right there, that's your menu. The second one down is stage 2 bull, and we're going to click on that. And then we've got some charts of ones that have entered stage 2 recently, and you can follow those. Some of them are well into the move. It's too late, but others, there we go. The first one, let me go, well, I don't know if you can see these, but these are sorted by weekly, and then next to on the right of it is a daily chart. This apps was a $100 stock a while back, and it just broke out. It is a little bit negative that it broke out at 462 and surged up to 7 almost. That's because everybody decided they're not going to go broke. It is kind of negative. It should have held above 462, but it's right on the green line. And relative strengths dropped to 80, so we're kind of losing interest. But over here on the daily chart on the right, it's right there on the green line, Naptown, so it's do or die. And there's a good chance this thing could go back up and take off again. Here's this Tuya that we have on the strongest leaders list. Tuya was 2650 in 2001, and it broke out here at $3 here recently. You can see the volume's huge. And so that's when everybody's deciding, oh, I guess they're not going to go broke after all. You can see this thing based for over 2 years. A long base is actually bullish if it breaks to the right direction. And this one, they're deciding this $2 stock's not going to go under, so it could go back to 26 in the future. Here's the daily chart on the right. You can see it's way extended, and that's why it's correcting right now. But it probably will have a swing trade buy. You can see the green zone coming up. And so we'll buy it most likely on a swing trade. But we have it on the strongest leaders list because it could go back to the high in the next few days. Here's a BABA. And these things have been basing forever, these China stocks, and it made a high. And the daily is, let's see, I'll let it catch up. The daily is super overbought, so you don't want to buy these right now because, well, here's another one. We use the banana line, but anytime you have a stock with a 50-day average, when you get way above it, just go back and look at history, and you'll see it's going to hit the 50-day average every couple of months. So don't get impatient to wait. They're going to meet again with the 50-day average, and that's the hard part, is waiting and realizing that they're not going to go to the moon. Yeah, here's a VNet coming up here, and VNet broke out at 450 and went to 15, so that's a ridiculous run there. So it's got to correct that, but yeah, there it is. But you can see the base, it based between 1 and looks like 450 for several years. And then all of a sudden something happened, the fundamentals change, and everybody piles in. These are mutual funds buying it because this was a $44 stock in the last economic cycle. And so they're buying it for 10 cents on the dollar. And now it's extended. And they go over to the daily chart, and you can see the red line, the 50-day, it's waiting on it to push it higher. So OS or whoever, that's why VNet's stalled out, because it just got too extended. But it'll normally retest the high here. We just bought it too early. Here's the ARC fund, which is, this is a good example. Arc Fun was the darling in 2001. It had a parabolic curve. I'll wait for the chart. Then it came down to the green line in early 2001. Then it made a lower high, which is a right shoulder. Yeah, there it is. And then it collapsed. The right shoulder is a lower high, or kind of like an M that doesn't have any gas left. And the traders saw that, and once it rolled over, they go, I'm out of here. So they sell it or sell it short, and then it tanked. And it had like a 2-year base. It broke out recently, and now it's sitting here on top of the base. Looks like about 55 was the top of the base, so the old resistance 55 now should become support. So it's right there. It needs to bounce here, and it probably will. Here's the daily chart. It got way oversold, just made a high, and we bought it betting it'd bounce, but the momentum stuff just got killed this week, so it should go back to the high again, but that might take a while, but still has a 96 relative strength there. So this one could go a lot higher. It was $155 in 2001. So that's just how it works, 4 cycles, and boom to bust. And you see this over and over. Here's another one, KC, that broke out. We're waiting on it to pull back. But these all had the same pattern. They were darlings, and then they just take them down to nothing. Another thing we've been using on this KC, it's hard to see that there is a banana line, a long-term average, and this is a fairly new issue, so it doesn't have a long-term banana line, but it does have one here at like $12. And when the stock was $2, if you were George the Monkey, you'd see a double bottom here. And if you really believed in the banana line, you would have bought it at $2 or $3, and it went up to 12 and even higher. So the long-term banana line is basically KC got too high up here, and then it got too low. Now it's too high again based on the banana line. So one more thing. Anybody have any questions on the, let's go back to the stage 1 charts here. Stage 1 is the base, and that's the frustrating part. But there are, if you're interested in looking, or if you have any stage 1s that charts you'd like to see, send an email. Put a bunch of these in here. Here's some good ones. Snapchat. I'll let it catch up, but Snapchat was a darling. 2001 went up to $85. Now it's down here at like $10, but it's trading. You can see the base there. It's trading between, say, 8 and 18. That's all indecision. One thing we do have is a banana line is up at like 22, so it's probably going to meet with that. It's probably going to break out, but we're not buying it because it's dead money, and we don't want to be just sitting in stuff forever. But that's how they work. Roku is another one. That was a darling. Big double top over here, 2001. They're buying it at, say, 480. The banana line, if you can see, it's down here around 150. So George the Monkey, he doesn't know anything. He just knows that he's not buying Roku up here, and the herd is, because everything's great. And so he gets an M, and instead of buying it, he shorts it, and then it goes down to the banana line. He makes good money. Then down here, it's doing it's really sideways, but it's returning to the banana line. But these are some good bases for, so what you do on these is you set a alert, you find resistance, the high here, you just set an alert above there. If it breaks out, you buy it. You want the volume to be huge, like 2 to 3 times normal. And then you check back in a year or two, it'd probably be 50 to 100% higher. Let's see here. This is Angie's list. It's been a dog there, but you can see the thing was way above the banana line. Now it's coming down. Here's Weight Washers. This one we made money on. They've killed it. It might not make it, but if Weight Watchers survives, it's selling it like under $1. The banana line's at $8. So if they survive, that's a home run. But we don't buy these because this one very well could go broke the way it's acting. But sometimes they don't. And a year or two, if it bases and meets all the rules, we'll buy it, and it could go back to, I think it was like $200 a while back. Here's this TAL education basing. That was a darling. Anyway, there's a bunch of these in here that if you're looking for home runs, these are the ones that can. Yeti was a darling, and now it's basing. Here's a Baidu, which is the big, this is a huge, I think it's the Amazon of China, BIDU. And it's still basing, but those were all real high in 2001. It looks like it's about 340, and now it's $90. So anyway, anybody have any questions? Here's Fastly. This one's really cheap, but it just can't get going yet. It was like 130, 2001. Now it's like $7. So, but it's still basing. But your banana line is up here. Looks like around $18. So this thing could double once they finally get going. People say, where's the next home run going to be? Most people don't want to hear it, but this is the inverse S&P. And if it ever breaks out, this thing could go way up, because it was way up there in 2009, the last recession. So George the Monkey, or stage 2 investing, we don't really care what it is. If they go down like an airplane and then they do a touch and go landing and turn back up, we're going to buy it if it meets the rules. There are rules to stage chart investing, and it's got to be above the green line. And for instance, this one is not. It's hard to see, but later on this year, if things went bad, crossed the green line with the 90 relative strength, we'd buy it. And small cap fund, RWM, actually is further along, but there will always be investments in stage 2, so might not be the Mag 7 or the AI stocks, but it'll be something. Speaking of that, real quick, we're about running out of time. Anybody have any questions here? If you go to show you some weekly charts, just to stage charts OS are on the dashboard. Let me find it here. You know where the dashboard is, and got too many windows open now. Go to the dashboard, and it's under long-term trading. You got all the links here. You got all these long-term trading. It's down here, stage chart investing. And if you click on that, then it'll show you a sub menu of the 4 stages, and they're categorized by that. Yeah, Knapp says, what makes it break out of stage 1? Usually it's fundamentals. A decision is made where the stock's going sideways and everybody's watching it, and finally the fundamentals, earnings or whatever, they start, because the mutual funds, they need fundamentals. They're not going to buy it. Technicians like us, we just look for buying. And so we're waiting for a decision to be made, and usually the company's turning around, they get a new CEO, whatever it is, and or they get bought out. Many times stocks will get acquired right when they start breaking out of stage 2, because somebody's telling, the company, the merging company, that you better buy them now before they get going, because it's starting stage 2 bull and it's going to go up. But anyway, those are here under Stage Chart Investing OS. Pat says, if SCTR was above 20 a few days ago, then I guess you mean the money wave on the above 20 and below 20, Pat. The SCTR, for those that don't know, it's stock charts relative strength indicator, and it's down here in the bottom. I'll wait for the list to come up, but it's down here at the bottom with a red box around it. It says SCTR. Here we got GDS. If you can read it on the right there, it says SCTR GDS 99, so it's stronger than 99%. Pat's asking about it. If it goes above 20, I think he's talking about the money wave here crossing above the green zone and going back down. That happens a lot. Actually, if they do it twice, like a double bottom, and then the second time is really a better signal. And that happens sometimes where they it can't really lift off. What it's really doing is retesting the low again, doing a W pattern. But back to SCTR, there's 2 numbers here, and they're hard to see, but the top number is the normal SCTR, which is basically weighted for the last 90 days of trading. It's not a very good indicator because it changes so quickly. It can go from 99 to 80 on a pullback. But the bottom indicator is more of a weighted long-term 1-year average, and there we're taking 155 days of the SCTR, and it's a 1-year average. And we really want to know, does the stock really have good long-term momentum? And this one, the 1 year is in the 90s too, which means that, yeah, it's been cruising for a long time. Let's see if we can find some. If you, let's see here, Meta is coming up. Meta has an 82, which isn't that great, SCTR. But what's even more negative is the lower number is below 80. It's at 72. So even though Meta's making highs, it is starting to run into distribution, where smart money's starting to distribute it because it's just so ridiculously overpriced long term. So that's what the 1 year SCTR is 72, and we want it to be at least 80 for a big cap. So this one's definitely losing momentum because it's so stretched. And I'll show you some long-term charts on that in just a second. Here's some, I'll go pull up Meta and show you what's happening there. Any other questions? Here's a long-term meta. So let it come up, but people don't realize, but it dropped like 70% 2 years ago down to $90 from, I think it was 400, and now it's gone from 90 to unbelievable, like eightfold, 800%. And you go, wow, that's a good looking chart, and it is, except the if you go down here to the relative strength, the bottom one's 73, and so even though it looks like it's going up, it's underperforming the market. And also the banana line down here, it's gone up so much that it's gotten ahead of itself. The banana line's at, say, looks like 340, and the stock's at 700 roughly. So this one's going to meet again. So Meta's not one to go. We're betting it's going to bounce off the red line for a swing trade, go back up. But if it does an M pattern here, it could really start down. The point I'm showing is that even though it looks like it's doing great, the bottom 1 year relative strength is, it's actually, shows on the scale here. You can see the numbers start to drop as the stock's gone up. The stock's going up slower now because you're getting a more equilibrium. You're getting more sellers than buyers than 6 months ago because people are starting to cash in. Let's see. But I'll show you some more of these. A lot of people ask about this A-Lab, Astera Labs. It's sort of an AI thing. Not a lot of value there, but it does have momentum. It's a new issue, so it doesn't have a 1 year average, but I think it's high. The short number, the top numbers dropped a lot. But anyway, this one made a high. It's come down the green zone, and it's probably going to correct, or it's probably going to go back up again. So this one could be on our long-term list here in a couple of weeks. There's no green line either because it's a new issue. Here's one that, a good example. This Arista, we've traded it a few times, and Arista made a high, 133. Now it's down on the green line, holding on for dear life. But the money waiver stochastics in the green zone. Now, if you go down here to your SCTR relative strength, it says 27, which we normally wouldn't buy. But if you have a big correction and the bottom number stays 80 or above, it's at 80, and it's probably going to bounce. So you wait for a green zone on there, and it's probably going to go back up to 120 or so. It's got so much momentum. That's why the SCTR that we use, it's convenient on the charts, but the top number is not really all that good because it moves so fast. It dropped from probably 90 to 27. We want as long as the bottom number, and you can see it's still in a good uptrend. And if they come to the green zone with that 80 relative strength, and this thing goes into a buy, you're going to have a nice pop normally. Here's the apps. There's your breakout, and you can see the volume was incredible there. So if it'll turn here in a week or so. Now the bottom number isn't that great because this one's sort of early in the bull market. It might not even make it, but when they're coming from a $100 decline, it takes a while for that long-term momentum to turn up. And what's happening is this is the first time the green line has turned up in probably 4 years. So a lot of people aren't sure it's going to turning. Here's a ARC fund. We've done that. Here's one. We're waiting on this ASAN. It was a darling, and I wait for it to catch up. It was up 145 in 2001, and now it's breakout at 28. Um, so if these things ever break out, that means that all this 3-year base is they're not going under. Right now, most people don't know if they're going under, so smart money's not going to mess with it. But breaks a hole in the dam, smart money's going to buy it, and it could go back. Usually, it go back 50%, so it could go to $75 easy once it breaks out. And they do it fairly quick, like in a year and a half. That's a long time for us, but 75% or a double in a year and a half is real good money. Let me go show you some long-term charts. Some of y'all seen this before. Here's the here's the fairly new fund. This MAGS. It's the Magnificent Seven, and you can see they made a high December. They're correcting right now, but it's coming down to the green zone. And you look at the bottom number, it's a 93. So even though the big seven are struggling now, and only 2 of them are on highs, this thing's not coming down much at all. It's with a 93 and sitting there. It really won't even come down enough for us to buy it on a weekly chart. Here's there's the NASDAQ 100 inverse, and this could be doing a W. What we do know is the banana line's at 50 and the stock's here, so don't be surprised if the NASDAQ, something bad happens and this inverse fund goes back to the banana line. It's right now it doesn't have any relative strength, but actually these numbers don't work on inverse funds. So, but this one's nowhere near stage 1, stage 2 bull. It's still in a base, if anything. Here's the NASDAQ 100, and you can see it's in a parabolic curve. That's not sustainable. So this isn't going to end well, but it just made a high and it's correcting. Now, if you look at the bottom number, it's only a 72, so this thing's losing momentum, and it comes down the green zone. We can't even buy it next time because it'll be too weak, because that's losing momentum. Here it is on a monthly. Now that's a weekly chart. Save numbers. Look at the top SCR. It's only 49. So this is all these big AI stocks losing momentum. But it's going to go to this banana line. And first it needs an M pattern. So George is waiting on that. But, you know, people say, oh, I don't want to hear that. But we can't help it if it does an M. And the reason it's so high is the NASDAQ 100, if you look at the last 15 years, the average annual return is like 80% a year, and people don't realize how ridiculous that is historically. So they're just going to come down to the real world, which is what the banana line says. Knapp wants to know about using different charts. Most people use a 60-minute chart to get in early on a daily chart. So you wait for a buy signal on the daily, it might already be up 6% that day. So they'll wait for a buy signal on the 60-minute, get in, and then if they get a buy signal on the daily, then they'll stay in. And then if they get a buy signal on the weekly, they'll stay in more. It's just a way to rotate to get in early using a shorter term chart. But really, when you're buying something, you should pick a time frame and follow like a 60-minute. Just follow the 60-minute indicators. Don't be flopping around from 60 to daily, or you'll just, because they're different animals, you'll get a whole different situation. Here's a rising rates fund. Here's interest rates going up, long-term rates. But this shows that rates were way too low in 2001, and it went to the banana line. This says that rates are fixing to fall, and long-term rates, and people go, "Oh, goody, that's good," but actually, it's not, because long-term rates fall. It means the economy's dying, and that's kind of what this is saying, that we're economy's so overbought, whatever reason, that rates are going to fall. And actually, you don't want rates to fall if you're bullish on stocks. You want rates to be high because that indicates strength. Here's the SH, the inverse S&P. It's got a base on it. Here's silver. We stopped out of that lower high there. I was going to show you. Let's see. Oh, now the semiconductors like this one. Let's look at the numbers. SMH, you got a 7 relative strength. Even the bottom one's 51. So this one, this could be a lower high and a right shoulder. It's going to go to the banana line. So this is dead money, and people that are going to sit around and play NVIDIA and that stuff forever, they're probably going to be disappointed. Here it is. This is the same chart with a parabolic curve. Parabolic curve is a kiss of death. That's what your momentum stocks did in 2001. And possible M, actually a lower high here. Your banana line, look at it, it's down here. This thing could fall in half easy, the semiconductors, and people don't realize how high they are. Here's your stage 1 base down here at 14 bucks. So smart money bought it at 14 or 20, and then they're paying 270, and these guys, they're hoping it'll go up. It's such an unrealistic bet. Smart money sees this is a terrible reward to risk, so they're getting out and they're going to finding stuff that's stage 1 breaking out. So you mess around with this much longer, you're going to be disappointed. There will always be stage 2 stocks, but it's not going to be where everybody is. Here's the S&P. Let me go to this real quick, and then that'll be enough. Okay, here's AMD. AMD, let it catch up. AMD got way above the green line. It's actually under the green line right now with super low relative strength numbers, so we're not touching it. But it could be correcting for one more move. If you look here, it had 2 corrections the last few years. The pink lines here still hadn't come up for you, but okay, here it comes. See the 2 pink channels. So AMD is, they've dropped it in half, so it could burp up again, but we're not going to buy it because it's not going to have the numbers. But if you go back and look, AMD broke out at like 4 bucks, and then it goes to 220. That's unbelievable. And people, smart money made tremendous money, and now you got a banana line here at 40 bucks, and they paid 227 when the banana line was 30. It's just the banana line just tells you how ridiculously greedy people have got, or the real world. Here's Amazon. Amazon's had a big blow here, and now if you look at the numbers on it, it's only got a 50 relative strength now. So even though it's cruising up here, it's cruising up slower than the strong market, so it's losing momentum. So it's at 212, and the banana line's at 70. And you can see where the base was. It was back here at 20 bucks. This could be a head and shoulders pattern. The left shoulder, right shoulder comes down, or sorry, the left shoulder would be at 188, then it drop to 81, then the head would be this big run, and then it comes down maybe to 130 and goes up again. But the big seven are just ridiculously priced. This Broadcom, it's losing momentum, but it still has an 80. So um, it might have one more pop left. But here's a Broadcom on a monthly. This is a historic parabolic curve, and you'll rarely see one like this when it comes up here. Um, Even though it looks like a monster going up, the SCTR rank on Broadcom's down to 66, so it's really losing momentum. Let's see, No Pants says something. He wants to know about option, using options to instead of stocks. If you're buying, well, here's Broadcom. You can see the parabolic curve, and that's not going to end well when you got a green line at 105. But plus the current relative strength only 64. It's still got enough momentum to bounce, but these kind, it's not going to end well at all because this stock is worth, I forget, it's like worth, let's see, 18 General Motors, Broadcom is, and one General Motors makes more than Broadcom. So just to put it in perspective, you could make 18 times your money buying GM versus Broadcom. That's how high some of these things are. Let's see, someone on Discord was asking, some people will do options instead of spending $200 on say we're going to buy a Broadcom here at 200, but $200 ago, I don't want to put that much. You can buy the options, like you go a month out, say you buy the 180s and they're $20 a piece, and that way you eliminate all the time premium of an option. So instead of paying 200, you buy an option that's 20, a 180 strike price, and if it goes up $20, your 180, your option's going to go up $20. So you can do that. Just don't buy the junk, like don't buy out of the money options. Don't buy forever out. On a swing trade, you're only going to need three days to 3 weeks, so you don't need to buy but a month out. But no pants, just don't only buy in the money options, deep in the money. If you can't afford the stock, at least buy the right option. They aren't as liquid, but you want to eliminate the premium, because with options, there's 3 things that can happen. And if you're buying options, 2 of them are bad. It's either going to go against you the wrong way, or it's going to go sideways and you lose on both of them. So if you buy options, buy in the money to eliminate all that time premium. And you can make money, good money safely. You're not going to have doubles and triples, but all we want is a 20% gain on an option. And you don't need to make the YOLO contracts like people. Here's some of these that are, people go, what's good value? Let's see, Pat didn't see the ANET chart. The top relative strength on ANET was 20. The top one was, or the bottom was 80. So we only used the bottom number. And bottom number shows it's got good long-term relative strength. It's correcting down to the green line, and it's going to go back up again normally. Whereas Amazon and Meta don't have a good long-term relative strength because they're going into distribution. Their smart money's unloading. But here's Boeing, uh, and Boeing is see if you're caught up here. Yeah, Boeing, you can see the parabolic curve goes to, it was a darling at 440, 435. Then it drops like 70%, which is normal, to the banana line. So Boeing is down here cheap. It's not, it's a dog nut right now, but this is just to show you that how a parabolic curve ends and that things do return to the banana line. And you tell people buying Boeing at 435 it's going to go to the banana line, they'll laugh at you. Just like same story on Nvidia right now. We find some. Here's BlackRock. They steer a lot of the money in the economy now. The three firms, BlackRock, Vanguard, and State Street, control about 75% of all stocks. So it made a high because they're benefiting from the steering they do. But if you analyze the new high, why does it only have a 57 relative strength? It's because smart money's distributing or unloading to the herd, and you got a banana line at 400 and it's at 1,000. This is why Warren Buffett's selling stock, because they're too high. Here's a good example of one, this Blink Charging, BLNK. If they survive, it could go up 500%, but we're not buying it yet because it could go broke. But if it bases here and breaks out, say at 4, banana line's at 12, that could be a good trade coming up. But the relative strength numbers show avoid it right now, and so, but this could be a stage 1 chart you could follow. We're actually waiting on the solar, and there's some energy, that green stuff. Those charts are trashed right now, so we'd rather buy an ETF than individual stocks. Yeah, here's Berkshire. Looks like it made a new high. That's a monthly. And you go to your, the top relative strength's only 78 because it's a big slow one, which is pretty good, but the bottom number is only 58. And then if you look at the banana line, you can see Berkshire is curving up. That's panic buying. They can go for a while, but once they start getting vertical, your time horizon is narrowing. It's like a missile going up, and then the missile sputters, runs out of fuel, and then that's it. Recession lines down here. And if you think we're not going to have a recession, you might be disappointed. Here's marijuana stocks are ridiculously cheap. Here's Canopy Growth. This was the Nvidia of the time. Went to 460. Now it's $1.50. So if they survive, banana line's at 46. So could be a home run, but it's too early. It's still doing 36 million shares, so somebody's accumulating it. Let me see. Oh, here's a best example, and then it's enough. Carvana. This is your banana hunt line example. Carvana had a typical parabolic curve in 2001. It was 376% above the banana line. And of course, it came down not only to the banana line, fell way below it. I'll wait for the chart to come up here. There you can see it way above. George just knows the bananas, and so he makes money when stuff's way above, he sells them short. Way below, he buys them. So you can see if you came here from Mars and you used the banana line, You would have bought Carvana real low, and now you'd be selling it just like 2001. But your average stock is way overpriced right now based on the banana line because of FOMO, greed. Here's some stocks is healthcare. This is CVS. It just had a 50% drop to the banana line. Bounce this week, probably on news, but um, when you least expect it, they can pull back. You see, here's one more. This 3D printing company, DDD. They're having a nice base here. If it can get through 7, it could go back to the banana line at 11. I'll wait for it to catch up here. Any more questions? Knapp asked about don't take a loss when. What we mean by don't take a loss is if the stock goes up and you got a gain and it's not really performing well, the stochastic gets over 50, it means you've basically shot your wad. It's not happening. So, you know, you can stick around, ride it a little longer, but don't dare take a loss. Get out. If it comes back down to where you bought it, get out and wait for the next one. It's just not a good bet. You place the bet, it burped, but it wasn't good enough, so go on to the next one. But here's 3D printing. That was a big fad, when they first came out. And now it's become a real company. It's probably selling, let's see, go over to symbol summary. And so it's only selling twice book value. So it's book value is like $7, but if you go back to where it was, they paid ridiculously priced for the 3D printing back when it first was a fad, probably 50 times book value. And so Knapp, you don't put a stop. You sell it if it goes back to where you bought it. You don't take a loss. Yeah, during the day. Don't mess around. You've had your buy signal. It burped up. It's not doing well. Get out or let it ride, but don't take a loss during the day. That's what don't take a loss. It means don't wait for a close. Just get out. We used to use the closing. We'd get killed because it'd fall through there. And no, if it's above 50 and nothing's happening, go on to the next one. Raise cash. Yeah, we can do Costco is a good example of one that's losing momentum. Costco has a big curve, or it's got a long-term chart. They're well managed, whatever. So it continues to make highs. And it has an 80 relative strength on the top one and a 69 on the bottom one. So it's losing momentum the same way. It's still a strong chart. It's one of the leaders of the big, especially for a company that they can't grow like to the moon because they're so big and it's not a growth market. But let me find put it on a. Okay, Costco is at 1,048, and the green line's at 600. So a year and a half ago it was 475. So is it really 100% better company than it was in a year and a half ago? Probably not. That's what the green line, the banana line says. It's gone up too far too fast. It's become a darling. Here comes a chart here for you. So, but it did make a fresh new high. So, so it's not um, in danger. But if it gets a double top up here and starts, well, if it breaks the green line, you definitely want to be out because you can see where it started. That side, it had a base there, broke out at 585, and then it almost doubled in a year. That's for a company like Costco. That's like unbelievable. And you start looking at the fundamentals. Let's see. Don't normally use that, but so it's 61 times earnings for a company that's, I don't know what they're growing at, 10 or 15%. That's ridiculous. It's 19 times book value. Yeah, those are unbelievable numbers. And let's go back to where it was. I'll show you the big picture on Costco just to give you an idea. Yeah, so you'll look, we'll look back and say, remember when people paid 60 times earnings for Costco? And historically, that would be like unbelievable. But that's what people are. The magician says all is well. 60 times earnings. Oh, no worry. Here's your um, parabolic curve coming up on Costco, and it should have been bought under 100 and not at 1,000. So you get a tenfold, 1,000% gain in this bull market. That's historic there. Normal bull market, you get a double or a triple, not 1,000 times your money. But if you can't see that parabolic curve, then you're going to be disappointed because this is not going to end well. Everybody's, I don't know, probably everybody's in it. The biggest warning sign is not only is it way above the banana line, but it's 69 relative strength. So you can't really see it on this chart, but it's looks like the solid blue line is no longer going up. It's still curving up, but these are the ones that, I mean, to the reward to risk on this is this thing could go up another $200, but it could go down $400. So reward to risk is terrible. The point of all this is showing find ones coming out of stage one, not ones that are blowing out. The magician says buy this one, and people are going to lose a lot of money because they're 15 years too late. That's how the game works. If you go to, I'll show you the stuff that's cheap. Here's a solar stock fund that's with parabolic. This is Costco. Well, I'll let it catch up. But the solar fund went from 17 to 125 in 2 years back in 2001. Everybody got in. Now it's down 70%. And like all the solar companies are going under, but the banana line's up here at 66. So this thing could almost double just going back to the no fear value. Can you see the banana line there? And look how much they paid 125 when the banana line was at 30 bucks. Is that good enough on Costco for you, Pat? Let me show you one more. Anybody else have any questions on Costco or here's a similar one, TJX, which is TJ Maxx, cruising along. And it'll show up in a second, but it made new highs recently, but the relative strengths dropped to 68 because because you're getting more sellers. The ratio of sellers to buyers is increasing. That's called distribution. And that's because the stock's at 125 and the banana line's at 40. While we're waiting, the magician story, the magician uses his hands to trick people. So they get you to watch one hand and the prize is in the other hand. So in TJX, the magician or the media is telling you all is well on TJX stock, but at the same time, smart money's selling it, and they're buying it. They're buying stuff that's not in favor because they know the banana line's at 40, but magician says, "Oh, this is well, buy in," and then the parabolic curve ends and it tanks, and people get stuck buying. This is what happened to bonds in 2001. Parabolic curve, stampede. Actually, it's 2020 during the COVID, and TLT went to 152. Then it fell in half. After that, went down below the banana line. And people thought bonds were safe, and bonds fell in half. Nothing's safe that has more sellers than buyers, and nothing's stronger than a stock that has more buyers than sellers. Oh, thank you, Naptown. Let's see. So TLT is most likely in a stage 1 base again because bonds are relatively cheap compared to a few years ago. But if bonds start a bull market, it's probably going to mean that the economy sucks. So might not want to hope for that. Natural gas is cheap here, UNG. And oh, okay. Yeah, UNG is a fund. The banana line's at 45, the stock's at 20, so this thing could double. It's been to 135 again. I'll wait for it to catch up here. You're welcome, Naptown. Are you still on Discord? I can't tell. Some people seem to be watching this on Discord. Here's UNG. That's a classic base. The banana line tells you it's overvalued, but it hadn't made a decision. Now the top relative strength has turned up lately. It's finally crossed the green line. The bottom number is still weak because it's not really in a stage 2 bull. But that's one that could easily double. I mean, this thing could go back to 120 again. United Healthcare is a darling. And because of all the Fed printing the last 15 years, this one's gone 8, plus they're making a ton of money. But if you look at what's happening here, normally we'd buy it coming down the green zone. This is a monthly chart. But let's go look at the relative strength. Top one's 8, the bottom one's 44. So this thing's going into massive distribution. And you wonder why, because the banana line's at 200. So people go, "Oh, it'll never go there," but it will. It's just a matter of time. Here's one, UPS. People go, "Well, I wonder why UPS is down." UPS is going down because the economy's not that great, and whatever the reason, but UPS is 44% below the banana line. Kirk asked about Now. Now has a similar pattern. Let's see. It was a super blower. Yeah, this one we would normally buy it for a weekly trade, but because it's in the green zone, but the bottom number has dropped to 75, so we want it to be 80. But that one's probably going to go up once more. But look how much it pulled back. But that's normally a correction. It's going to go up. But you get up here 1,000, 1,100 again, and it rolls over, that thing could go down to 650 again. But that is one of the stronger ones. Anyway, UPS, a lot of these are discounting a slowdown, and UPS is one. The chemicals are discounting a lot of this. Chemicals are cheap, like Archer Daniel, and there's a few of those that were darlings not too long ago. Let's see here. Find Archer Daniel for you. This here's Apple. Everybody's watching that, But Magician says all is well. But if you look at Apple, it's got a 55 relative strength or 66 depending, and the banana line at 165, 175. So these are perceived as safe, but bonds were perceived as safe on their curve. And so, yeah, here's a long term on Apple, just to show you how people lose a lot of money. Apple broke out of a base around, I can't tell, $25 or so in 2012, and now it's 10 times that. So um, wait for the chart to come up. It's parabolic. Everybody's in it. Every fund has it. It's perceived no risk at all. But George is waiting for an M pattern to sell it, and he sees it worth about $70 next recession. So we don't know when that'll be, but we know Apple is parabolic. You can see um, smart money bought it correctly down here in an indecision. You plant your seeds, you let them grow to the sky, you sell it, the relative strength drops, the parabolic curve breaks, and then it corrects. Usually these drop 50 to 70% after a curve. Here's Archer Daniel, parabolic. That's a chemical company. Went from 25 to 91. That's four times. That's huge for a chemical company. And then it's dropped about 50%, and it's actually undervalued based on the banana line. Wait for the chart to come up here. So a lot of these that, if you look at history, the chemicals and transports, a lot of those go down first before we go into a slowdown. Yeah, there's Archer Daniels. So this one's down here getting flushed out at 45, and the banana line's at 66. So this one's undervalued. Plus, but it's in a decline stage 4, so we're not buying it yet. Here it is. Oh, this is a competitor, ALB, another chemical stock, parabolic at 326, and then it's $80, right down to the monthly banana line. So who would have thought it would drop, 70%? That's just how the game is played. Let's see, I was gonna. People ask about what is smart money. I've decided there's smart money and there's evil smart money. I call the magician or evil smart money is telling you everything's great in Amazon, when in smart money is selling it or distributing. But evil smart money is telling the herd that all is well, get in. Like the magician, he says, watch this hand. And at the same time, the prize is at $70, and he's saying buy it at $230. Does that make sense, Naptown? The magicians are evil money. Smart or somebody knows that Amazon's overpriced. The media is telling you everything's great. So I look at it that there must be some evil people telling the herd to buy an Amazon up here that all is well, because they know how it's going to end. But smart money, they're just getting out and finding something else. But the media who controls is controlled by somebody. I don't know who is convincing the herd that Amazon has no risk, when in reality it could fall in half easy. And that's how it works. So so forget about. Um, all I'm saying is, if you want to know what something's worth, pull up the long-term banana line, and that's what it's worth. Or buy stuff the magician's not talking about. And you've all probably seen Intel. I'll show you that. Nobody will touch Intel, but then you go. Intel was selling at book value the other day. Here's another one. Enphase. This is one of these darlings that it's I don't know, some kind of energy, a green energy thing. Um, and Naptown asked about mutual fund managers. Most mutual funds underperform the market. Those are just trend chasers, and most of them just follow the herd. To me, they're a form of dumb money. They use fundamentals, and they get caught. And when the problem they have is they get all the new money coming in at the top of the market, and then at the bottom, when they should be buying, they're having to liquidate because their dumb customers are saying, "Get me out." So they really can't do a good job because they're having to sell low and buy high. That's when they get the money. But they're not smart money at all. They're buying stuff well into stage two. We're buying stuff early into stage two before everybody has it. We're buying stuff in the period of indecision, right after a decision is made. But here's Enphase. This was the darling. We traded it a few times a few years ago, and you can see the parabolic curve at 339, and that's like 50, $60, and the banana line's at 160. But we're not buying it because it's still in stage four, and it doesn't have any numbers. But this one, 41 million shares this week. Somebody's buying it. We're not. Um, these are what I call bottom fishers. Or Warren Buffett would be, in the old days, he would buy stuff like this and wait on them, because he would buy stuff for 5 to 10 years in the old days. But now he doesn't, because the fund's too big, so they have to buy anything so they're buying Apple or anything that they perceive won't get hit hard. But he made all his real money buying stuff out of favor like this one. Here's the GDS we've traded. You can see the herd bought it for 115 when the banana line was at 40, and then it goes down to $5, just trashes everybody. Now it's at 50. So probably one more time on that. We're betting it's going to go up one more time, and then double top. Look out, because the green line's down here at $20. GE. This just shows you how the banana line works. Now this is like a 20-year chart, but you can see where if the banana line is your target, you buy below, sell above. Now look at GE, parabolic, sky high. GE was the number one capitalized stock in the world in 2018, I think. And then, of course, everybody's in it. It tanks, and then it based down here. And now they've done a bunch of changes and got back, but they just killed it from 150 down to $26. They even kicked it out of the Dow, which is classic. Here's Google. Google has a 26 relative strength, and the bottom number's 52. So Magician says Google's safe. Banana Line says it's $60 in a recession. So take your pick. Here's a ETF. You want a home run? This one was like a darling in 2021. Now it's like 70% off with a banana line. iCoin is the name of it. getting ahead of the charts here. ICLN. So so this one's worth probably 17, but no, the magician's not telling you to buy clean energy stuff. These are all out of favor because of politics, but it shows it was overpriced in 2021. Now it's underpriced now. And here's the one that's really amazing, to take one of the 30 Dow stocks and trash it down to book value, which means the parts are worth more than the stock was trading for. And so Intel's way down here. It went down to 18, and the green line's at 36. Someone asked about Microsoft. Um, yeah, here's the Intel and parabolic, and it peaked around 2021. They made some bad decisions apparently, and now it's, it drops from 60, so it loses 30%. Home builders are finally losing momentum. Normally we'd buy it down here, but the relative strengths drop below 80. They might go up one more time. See if we can find Microsoft. Or here's one, Kirkland's Jewelers, KIRK, real nice base on that. And it had a base back in 2020 and went from 4 to 34 on stage 2 bull. I'm getting to Microsoft here, Pat, in just a second. And let you see this Kirkland jewelry. See the two nice stage 1 bases, and that was a real blower there back in 2020, just from 4 to 35. We traded that. Here's another ETF. So you need to get your accounts where you can buy these kind, because this, that's actually a lithium stock. So lithium's way out of favor. Here's the one I was thinking. This is a lithium ETF, LIT. So it was up here in the 90s, and now it's 41% below the banana line. Nobody is in it. Magicians saying don't touch it, and smart money's gobbling it up because it's all the lithium companies aren't going under. I don't know what the problem is. I guess they got too extended. Here's a longer term chart of the lithium fund going through the 4 stages. When it catches up here, that's a shorter term view right there. You can see how it's oversold from fear. So opportunity there for George the monkey. And then coming up here is a longer term view of that. You can see the bull market. Now it's in a stage 4 bear, and probably getting ready to start basing again. But look how it goes from, once the bull is over, it drops about 70% again. Here's Meta. We've already seen that. I'm trying to find Merck has actually gotten trashed. That's a Dow stock. And it dropped way somewhat below the banana line. Well, I'm looking for Microsoft. No, Microsoft is probably in stage 3 top. And it's really gotten weak lately. It might have one more try. Here's a Microsoft coming up here on on the weekly chart. The bulls would say that, yeah, this could be a stage one base for Microsoft, but most likely a stage one base and a stage three top are both have the same look. You can see it's got support at 393, but with a 31 relative strength, um, it's probably not going to break out to the upside. Let me show you the whole cycle though. Here's the coming up here is the monthly chart, and it based looks like it broke out around 30, and in this bull it went up to 450. Doesn't get any better than that, but now everybody's in it. Smart money's leaving. Relative strength 53. Banana line at 125, and everybody's in. Magician says all is well, no risk. So that's as parabolic as you can get. And if anything, it's now the monthly stochastic here is coming down to the green, so it could come down to maybe the green line or so and then go up again. But the good money's been made. It should have been bought 15 years ago. And you go through the fundamentals. Let's see. People don't realize, but it's $3 trillion in value. 32 times earnings isn't ridiculous, but they're not growing anywhere near that. It's 10 times book. It's not as ridiculous, except for the capitalization, 3 trillion. Let's see how much money they made. $12 on a $400 stock. That's pretty steep. Especially you go into a slowdown and they quit growing, then they start giving these things away. That's all that happens is they get everybody in, pull the plug, flush them out, do it all over again. So generally this would next recession it would give up half and go back up again. And we can't control that, but historically there will always be stocks that are going up, even though it's not Microsoft or Google. So you make money buying what nobody has. They don't have solar stuff or clean energy or marijuana stocks or natural gas or inverse funds. There's several groups like that, and we'll just be waiting for something to show its hand. The inverse funds, let me show the one here. You might have seen this. These small cap funds, small caps are weaker because high interest rates are hurting small companies. But if we do go into a slowdown, this RWM should be one of the first ones to start a bull market. Let me find the chart for you. And if you can't do inverse funds in your retirement, you need to get another plan because this might be the only way to make money. Here's a RWM, which is an inverse fund of the small caps. And all it needs to do is get above 25 bucks. Well, wait for it. Break out at 25, and the high is like a few hundred last recession. So this thing could go up real well. Plus it has, if you know nothing except what stage it's in, then it's clearly this one is in stage one. It could go lower, but it's not making new lows like the inverse S&P. Let's put it on a monthly. There's your okay. So the stock's at $20. Got a banana line at 65, or yeah, 65. Look at the volume heating up here. So that's probably not dumb money buying it down here. You know, you have to ask yourself, Pat, who is buying all this volume? Or George doesn't know anything except he knows it's going to go to 65 or to the banana line. And that's a triple. Whereas S&P, let's look at it. Oops. So here's the S&P curving up. Let me do SPY so we can get some relative strength numbers. Yeah, so the S&P's got maybe a higher high last week, but your bottom number is 72 and the top one's 67. I'll let it come up. S&P should have been bought about 2013 when it broke out of stage 1 base. And so everybody's in it also and it's perceived no risk. So we're just fine. The ones that are coming out of stage 2 bases, out of stage 1 base, like this one was 15 years ago. This is a historic chart, and you'll read about it 10 years from now in the history books. So everybody's in it, and stocks are, if you read about Warren Buffett, he usually buys stocks at 1 times GDP. Right now, stocks are 2 times GDP, which basically means that Warren Buffett will buy the S&P at the banana line, which would be about right. So the magician says, nope, everything's good. Don't worry. And all we're seeing is a lot of distribution going on. But there will always be stuff to buy. It's just not going to be what they tell you about on TV. Anyway, I've rattled on long enough. Any final questions? No Pants wants to look at MSTR. That one's down here. Yeah, it should go again. That's one of the. Yeah, that actually is setting up for a longer term trade, like a weekly trade. It's down into the green zone and still has an 89, so that one's going to go up again. This is probably a correction here after that big move. Same thing with Bitcoin. Bitcoin's really pulling back, but it's probably not in a bear market. This is probably something like that. That would be a correcting wave. No Pants, you see it? Oh no. So yeah, that looks good. When it turns back up here, it's got to get back above 20, and then your SCTR is perfect down 89. When you come down the green line, you still have an 89 as the bottom number. That's very strong. So that's a good one. Plus the the impulse wave. Let's see here. The impulse wave is your power move. That's one from 114 to 500. So we could do a retracement. Let's see where that. There it is. So depending where a lot of people wouldn't count that spike, but it's retraced 62, 65%. So it needs to get going, but normally we'll buy it here. That actually will go on the long-term list here, it looks like, for one more. It's got a bounce at the green line there, but that looks real good. No pants. We need the Bitcoin things to go at the same time. Let's check that. Yeah, same type of pattern. Bitcoin it's not quite in the green zone, and 81 relative strength, so it's probably going to go up again, but this is a larger correction. Okay, well, that's long enough for y'all, and thanks for showing up, and let's see if we can have a better week next week. Okay, goodbye.